one question, very important. What do you think the retail investor should really be focusing on right now?
I would say a few things. The first one has to do with the animal spirits that are running in the market, George. I
Okay,
think
yeah.
it's quite impressive. I mean, I get ads.
Impressive's a nice way to say that.
Oof, I don't know. I'm trying to be polite here, but I have vibes of 2021 all over again, to be
Mm.
frank. And in 2021, people made a lot of money. People also lost a lot of money in 2021 by participating in bubble-like investments, right? And when I hear that Apple today is giving up the electric car project to participate in AI, all of a sudden, a 10-year long project given up just to be able to say, I'm Apple, I'm doing AI too, by the way. And when I see my Twitter feed, it has super micro computer ads now. I mean, companies that are supposed to be ultra profitable are aggressively advertising on Twitter. I don't know. It smells a bit like Euphoria is taking place as we speak. Of course, Bitcoin price is up $60,000 again. It's not that far in percentage terms from the all-time highs. Which also adds to these animal spirits. I mean, people say, yeah, but it has to go another 6K. That's like 10 to 12%, which in Bitcoin price
Oh, it could
terms,
do that
even
by this afternoon.
yes, it's like it could happen tomorrow, really. So it's 1 inch away from all-time highs. And all-time highs, I want to make something clear, are generally bullish. Like when an asset is reaching all-time highs, it generally means when it's the stock market that it's an asset that is producing good earnings, good cash flows, and therefore people are buying into it. And this narrative of, hey, it's all-time highs, you should sell it, it generally doesn't work when the economic cycle is supportive, when the underlying asset is producing cash flows. Unfortunately, most of the underlying assets we're talking about here are not producing a lot of cash flows. They're nevertheless hitting all-time highs. The economic cycle is interesting. We can discuss about it, but monetary policy is certainly not accommodative. The housing market is basically frozen. The labor market is at a point where companies aren't hiring any more full-time workers. They're basically hoarding their current labor, trying to hold off from firing them. But we are not in a hot part of the cycle, right? We are in this very vague and strange part, yet animal spirits are running loose. And I want people to, have that as their big picture.
Yeah, well said. It's like back in 2021 when you just add coin to your name, or in 99 when you just add .com. It's like the
Yeah.
exact same vibe.
I have to say, yes. In 2021, I was making jokes on Twitter. I just joined. I would say, what about the Alf coin in the number of followers? That was a joke, but seriously, the situation is very animal spirits like. If I look at option markets, for example, I'm a macro investor, so I look at all asset classes around the world, from crypto to equities to bonds to anything. If I look at the option market in equities today, what I see really, George, is that people have zero interest in downside protection,
Yeah,
zero
right.
interest, and a lot of uprising interest in upside. So they want to buy these out of the money call options, which are going to pay big and make them rich if Nvidia goes to $1,000 per share. But they're not interested in hedging their Nvidia positions with puts, with protection. So if you look at stuff like the skew, for example, which is known to be a measure for the relative appetite for calls versus puts, you normally have people generally have a little bit more appetite for puts than for calls, right? It's like an insurance premium.
Yeah.
People pay a bit for puts, they're a little bit more expensive. And this measure now of skew is as low in certain cases as it was in 2021. So again, it gives me vibes of people are really not interested in downside protection anymore. They're reaching for the upside. And again, there is quite some euphoria going on. If you look at credit spreads, another macro indicator, which is quite interesting. So the additional cost that corporates must pay on top of the government yield, basically to
Right. Like a
borrow, right?
10-year. Yeah.
So there is a credit risk in a corporate issuing a bond rather than the government. So they need to pay a premium. Well, that premium, that credit spread, is basically almost at the lowest levels in 10 years. So that means investors are not demanding a lot of premium, right, to buy these corporate bonds. They're pretty comfortable that it's going to be fine. You'll see all these behaviors in different asset classes, and they all point to a high level of relaxation, I would say, towards risks. And that's a bit funny to me, because while it's true that this recession was waited for maybe a year and a half ago and it never happened, it doesn't mean that things are going to be amazing for the next 2 years. And assets are priced basically to perfection as we speak.
Yeah. I heard a quote the other day from a very successful hedge fund manager. He said, just manage your downside and the upside will take care of itself.
Awesome quote. So one
Yeah.
of the risk management parts that I use, and it's a similar way of saying, not exactly the same, but you're going to be wrong about 50% of the times when investing. That's true for everybody. So when you see somebody on Twitter says that he's always right, it's clearly bullshit. Clearly bullshit. It's marketing. But so if you invest or have invested for a long time, you know you will have some ideas, and some will be right, some will be wrong, George. We're humans. We are right 50% of the times, we're wrong 50% of the times. But the trick is try to be wrong but small, and right and occasionally very big when you're
Right.
right.
Asymmetry.
Correct. It's all the idea of asymmetry, really. And that's how the best investors out there make money. They're not right 80% of the times. They're right 55% of the times, but they're right big when they are, and they're wrong small.